Alright guys, welcome back again. Today I want to show you guys something. So as you can see, uh, it's this that same chart we had in the last video. So let me zoom a little bit. So guys, okay, as you can see here, from our last video, we were having some trade around this area. So we actually expected the market to come down to this level, but the market gave us more than 50% of our expected profit, and it retraced back to our break even here around this level. We went back and gave us another entry. So as you can see, I had my entry here, made some profit, make 2% of my total risks, and the market, it broke this our level, the level I talked about in our last video. So as you can see here, the market gave us a correction leg to this place, gave us an M pattern, and the market dropped. So as you can see guys, so it was a serious drop. So on that last video, I actually told you guys that if the market breaks this our red line here, we'll be expecting a little push back up here, which will be our corrective leg, like a pullback. Then the market will continue dropping down to our next level, which is this level here. So as you can see, a daily candle close above, close below this level. So as you can see, a strong and impulse daily candle close below this our red line here. So from next week, we'll be expecting a little pullback. Okay, let me show you guys what we'll be expecting next week. We'll be expecting a little pullback like this, then we expect the market to push down to this level. Or if the market didn't do that, the market will just continue coming down to this level, down till it touches this level. Or if the market fail to do this above expectation, the market can just retrace back. It will still be a corrective leg, retrace back a little bit to this level. This is our strong level here, then the market will drop. So this is our three scenario that we'll be expecting. First, either we expect the market to just continue coming down to this level without a pullback, or we expect a correction leg as a pullback down to this level as a second scenario, or our third scenario, which we expect the market to move in a corrective pattern to this our level here. This our level right here. Let me put a red line on that level so that you guys can see. Okay, our level here. Yes, so this is our scenario for next week. This is what we'll be expecting next week. So as you can see guys, so I want to show you guys something. Let's drop to for our chart. Okay, let's take all this. Let's take all this. Let's take all this. So guys, as you can see, this were the trade I took from last month down to this month, which is October. So let me show you guys how to took some trade on gold. I want to show you guys one of my account. So as you can see, it's a one face account. As you can see right here, it's a one face account. I took a trade in total of 4 days. So as you can see, these are the days. So in these 4 days, I was able to be profitable in 3 days. So as you can see, we have 3 profitable trading days here. I have made over $309. My win rate is 75%, and the account is still going. So as you can see here, so the account is still going. So what we'll be expecting next week, I was expecting to take more trades next week for me to pass the phase one, and the next phase will be a funded account. So I'll be giving you guys the update on this particular account, um, how I'll be trading this account from this challenge phase down to live phase and to my withdrawal phase. So that's it, guys. That's it. So let's go to the chart. Now I want to explain how we able to get this serious impulse. So as you can see, on the 9th of October, China actually made uh, an economic restriction on rare earth metals. So, and rare earth metals are classified under commodities in trading. They are classified under commodities. So, and when such thing happens, it normally drives the price of commodity like oil to be as a result of reaction from investors. Most of the investors, when such news come out, then react to the market quickly. So as you can see, that is this our impulse from this place down to this place, a strong impulse. Normally the market is supposed to move down to this level as what we are expecting, but this serious impulse is as a result of the announcement that China made, and United States president also responded with 100% tariff. So that is the cause of this serious impulse. So as we step into next week, we'll still be expecting a pullback and a continuation down to that our downtrend line. Yes, this is our downtrend line here, downtrend line here. So that will be what we'll be expecting next week. So guys, so as I always say, guys, trade oil, crude oil is very very easy. Once you keep yourself posted with economic news, politics, tension, wars, and all those things, I guarantee you'll be making a serious profit. Now, normally I don't trade, most of the time I don't trade currency pair, because currency pair is um, is somehow too technical and unpredictable. Because okay, for example, let's take Euro USD for example. Maybe you have a setup that is supposed to play out on Euro USD, but because it's paired with European currency, which is euros, and United States currency, which is a United States dollar. If maybe you have a setup, man, maybe I have a serious setup, you don't know what is happening in the euro economy, because euros is not just one country, it's made up of so many European countries. So since it's made up of so many European countries, this might affect your setup from playing your technicals most especially. But crude oil is not like that. Crude oil, once you keep yourself posted with OPEC, uh, economic news, and the rest of it, I guarantee you will always make profit from most of your technicals. Once your technicals aligns with those news, voila, that's all what you need. You don't need to take, so as you can see, uh, from um, from 4th of September to from 4th of September to 9th to 10th of 10th of October. I took only four trades. So as you can see here, one break even, three profit trade. The first one was 3.95% of my risk. The second one I made 2% of my total risk. The third one I make 3.3% of my total risk. Then this one is I it went to my break even, which means I didn't make any profit on this trade, and I also didn't lose anything on this trade. So that's it, guys. Very simple. You don't have to take 10 20 trade in a month. No, you just have to take quality trades. So as you can see, quality trade that is likely to play out, high probability setup, A plus setup, guys. That's it, guys. So that was it. So next week I'll be making another video to show you how the market play out from here, as I explained previously. So from that next week, we're expecting the market to move corrective leg up here and drop down, or it could continue down straight without giving off a corrective leg, or it could move down to this level here and drop. So guys, that is our expectation for next week. I'll be keeping an eye on this particular setup. So once the setup play out, like I just explained, I'll hop in. Nothing more, nothing less. I'll just hop in. That is it, guys. Peace.